Good morning, traders. Thanks for joining us. This is Michael coming to you from Game Edge on Wednesday, September 8th, with our pre-market prep session. As always, we'll cover our three pillars here at Game Edge: sentiment, structure, and trend. And as always, follow us and like and subscribe on X as well as YouTube. You'll be notified when we go live with our content. And check out our pre-market prep as well as our midday recap and then our post-market review of how we used our tools, how we looked at our SPX game plan, pre-market, and navigated the SPX option structure for the day. All right, let's go ahead and jump right into it. Looking at our market trend model, this is based on the tick index. Again, that's buying versus selling in the overall market. To get orientated really quickly, if you've never joined us before, the white bolded CT is our intraday instantaneous CT. This is an indication of buying versus selling in the overall market. Our shorter term momentum moving average is what we call the railroad tracks. Again, that just gives us an idea of momentum of the overall market and the buying versus selling. Obviously, if these the bolded CT is from lower left, or sorry, upper left to lower right, there's more selling. And if we're under the moving averages, obviously more selling occurring in a week in the overall market. And then if we're under the colored ribbon, again, a little bit more bearish and we're cautionary on the overall market. New highs versus new lows indicator. New highs were outpacing new lows slightly yesterday, but the concerning one was the filtered cumulative tick. Again, this is plus 1,000, minus 1,000, larger block orders and institutions was significantly to the downside with negative 70,000. So a large amount of institutional selling into the afternoon yesterday. So we'll watch that this morning as we get ready to open and how we play out. If you're a bull, you want to see this bolded white CT start moving back above these shorter term momentum moving averages as well as the colored ribbon. And if you're a bear, you want to continue to see these fail at the moving averages on any retest and continue to the downside. All right, let's go ahead and jump right into our tick RC. Again, this is how we trigger our mechanical portfolios, our P trans to PX portfolio that based on buying and selling overall equities with the scanners that we have within Game Edge. And then we have a wheel strategy also that is mechanical, that is turned off via this market trend model also. So check both those strategies out via our blog as well as content we've posted on X. So this bolded white CT is obviously cutting into the colored ribbon below the red here, indicating that the red now has a negative slope, and then we're below this below the moving averages, or what we call the railroad tracks. So again, if you're a bull, you want to see this start moving back to the upside. Again, that would just be a test of the colored ribbon. So we'll pull back in a significant longer term uptrend. If we fail and start to merge below the colored ribbon, it will turn off all of our signals, and we would look to get short probably the overall market for maybe a little bit more weakness and move to the downside. So we'll watch our market trend model at the open today and see how we navigate that buying versus selling in the overall market. All right, moving on, the SPX options complex. Again, this is largest, most notional value. That's why we look at the SPX to understand where market participants are positioning via the option structure. We separate the SPXA and the SPXP. So the SPXA is the cruise ships, the larger tankers, institutional positioning via the SPX option structure. We are call dominated still via the October expiry, so we see a significant amount of net delta overhead. The one cautionary flag, which we'll look at another slide here in a minute with all expiries, is we're starting to see some out of the money put hedging come into the left-hand plane. We call the left-hand plane is below spot price. So again, this could be opportunistic for market participants, or this could be positioning for a little bit larger pullback. So we'll continue to watch that. We do see PX up there at 6,800. We see the transition areas here where we'd like to see spot price stay above. Again, that just keeps us in a more bullish, call-dominated positive gamma structure. All right, moving on, the SPXP. All expiries turned on here. We are call-dominated above and below spot price. We do denote here, though, that we do see a significant amount of out-of-the-money put hedging, again, on the SPXP coming in. So again, this could be opportunistic for a pullback, or this could be setting up for a larger pullback in the overall market. 6,600 is that large gradient to the downside, and we see 6,650 as well as 6,700, which held extremely well yesterday. And then we notice our transition levels that we need to stay above for a more positive gamma call dominated structure to move up towards the 6,800 PGX COI. Again, we see a significant amount of out of the money call speculation still alive and well in the right hand plane within the overall structure. If this starts to degrade and we start to see some of the out of the money calls close or expire, and then we see some exposing in the money puts, again, that will turn this to put dominated. Then we change our overall stance as just a pullback within a longer term uptrend. Moving on, the SPX P-GEX ratio or gamma edge ratio. Again, this is like a put call ratio, but we add a gamma component, which is a time component. And basically this is telling us the short dated call gamma versus short dated put gamma ratio. Obviously you want to see this significantly moving to the upside, indicating a larger amount of short dated call gamma coming in, which is out of the money speculation within the overall structure. We saw a larger pullback yesterday, and we saw the GEX ratio drop below 1. Again, that's bearish, but if we're above 1, that is bullish. So as of now, we give the edge to the bulls heading into today with the GEX ratio at 1.2. We talked about this last week, reaching an extreme of 2.3. We thought we were going to most likely be observing a pullback within the overall structure or within the overall SPX, which we are seeing now and coming to fruition a little bit. So we'll watch this again. Could be just a shorter term pullback with a longer term uptrend, as we've seen all the way back to September. We reached that 2.3 level, and then we see a pullback within the SPX, and then we start moving right back up, and we see the short dated call gamma coming right back into the structure, and then we reach new all-time highs again. So we'll watch this overall rotation of down via the out of the money put speculation, and then back up with the out of the money call speculation. All right, moving on to the delta balance. Again, all of our charts here at Gamma Edge are interactive, so you can scroll over and look at the overall strikes as well as the options expiration. So again, we're above that zero line. Right-hand plane is the green dotted line, left-hand plane, the red dotted line above and below spot price, and then the aggregate is the overall delta balance. You want to see both of these staying above the zero line for the rest of the week, which we for today, and then for the rest of the week, which we are observing here into the 9th, and then Monday or Friday is the 10th, and then we have a holiday on Monday. So again, we're staying above the zero line, the right-hand plane indicating out of the money call speculation. Moving to the upside, left-hand plane, we do see some weakness coming in after the holiday next week, and the delta balance drops, but then recovers. So again, you want to see this continue to stay above zero, which we are. So the edge is to the bulls, and you want to see the delta balance pegged at 1, indicating that call speculation or call speculators are maintaining overall control. All right, SPXP net stat command for today. Highest sensitivity levels. We do see in the money calls below us 6650, out of the money calls 6800. Again, that's far away. Target today that's most likely not reachable. And then look at the charm, 6680 to the downside. As long as we're staying above that, again, that should be supportive. And then 6745 to the upside. Again, this will be a larger headwind. As you see, the right-hand plane integral is significantly larger than the left-hand plane. So again, price appreciation above 6745 may be difficult unless we see a large amount of out-of-the-money call speculation via our intraday vol-am commands. All right, staying above 6680. Again, this continue to be an area that will look for supportive type action. If we start moving below 6680, we'll start removing those long deltas, capturing these out-of-the-money puts, which will be negative deltas, and that could lead to a little bit more weakness. And then out-of-the-money calls, 6745, again, highest sensitivity level there. If we move above 6745, we'll start adding more positive deltas at a little bit faster pace. Again, that could drive us a little bit higher. You also notice the left-hand plane and right-hand plane integrals fairly low today. That's fairly balanced here. So again, not really expecting any significant move, at least to the upside. And then as long as we're above 6650, that will continue to be supportive type action. And then you see Vanna, really not much contribution for today if we do see volatility drop there or increase. Moving on, the SPX P0DTE, again, put dominated as we start the overall trading day. We'll look at the pre-market. We're sitting at 67.26. So we're right within the overall transition area. So our if-then statements for today are above transition, we'd be a little bit more bullish. You see 67.40, 45, that double strike there, highest gradient. Again, we talked about that on the net stack command and the top of DES. So just a large confluence of a lot of factors coming in there. So we'd have to see a larger amount of vol-am out of the money call speculation come in to drive us above the 67.40, 45 area, and that'd be looking to drive us up towards 67.60, 67.65 COTMC, where out of the money calls go in the money. Conversely, to the downside, if we're stuck within the overall transition and we move below transition and we're in the overall drunken sailor range, we'd be probably shorting for a move down towards the bottom of DS. Again, 6,700 comes into play around Livermore level, large area, and then COTMP, where those out of the money puts go in the money. And historically, that's an area where we see monetization. If we get below 6,700, we'd be looking for this next gradient towards the downside at 6,680, and obviously would be short below drunken sailor range for a move down towards 6,680. And then if we lose 6,680, obviously moving down towards 6,650, 6,660 would be the next area. And then obviously all the way down towards 6,625, which we're not expecting today. So a couple takeaways. We're put dominated. Narrow transition area today may open within the overall transition. So it could be choppy price action within the overall drunken sailor range. Two large gradients overhead. They're going to be difficult to overcome unless we see intraday volumetrics. Market participants speculating. So these would be an area we'd look for stalling, possible shorts. And then below the transition area, we'd be looking for a short down towards DS, and below DS down towards 6680. So as always, come join us at gameedge.us. Click on the newsletters here and put your email in. You'll be delivered to your inbox. Then check out our free courses, GameEdge Fast Pass Flagship Options course with all of our methodology and significant education, and 2 other courses. And then if you want to join us within our Discord, our live trading in Discord, click on the pricing tab. You'll be taken there. Again, a large or extensive community of traders of all backgrounds that are willing to help you out and get up to speed very quickly. All right, let's move on to the trading view chart for this morning. So I've overlaid our game edge levels, which are a full expiry or 0 DTE, depending on if you're a 0 DTE trader or a swing trader. My scripts are full expiry, and then I just manually overlay our 0 DTE transitions, just get a better sense of where those confluence of areas are this morning. As you can see, the transition 25 to 30 is going to be pretty important, as we've already discussed on the 0 DTE, as well as all expiries. Staying above 67.20 and 25 will keep us in a more bullish call dominated environment. And then emerging above 67.30, we'd be looking for a move up towards the top of DS 67.40, and then ultimately up towards that 67.50, 67.65 to the upside. And then we have obviously plus GEX all the way up there at 600 that we discussed. That's probably a far target for today, most likely. And then looking at the overall SPY, obviously we're above transition, 0 GEX and intrans. But you see Qs just oscillating the P-Trans 0 GEX. Again, staying above those are going to be important, as well as IWM 245 staying above P-Trans will be important as we head into today. So the quick takeaways are market trend models weak. We were put dominated to start the day, so a couple chinks in the armor, a couple cautionary flags that we'll be watching, and then if we're below transition area, that would be cautionary also. So let me know if anybody wants to look at individual equities. I could hang around for a few more minutes. Thanks everybody for joining us this morning. Appreciate the interactions we're seeing on X as well as YouTube. As always, share our content and like and subscribe, and be happy to discuss any individual equities heading into the open today, as we'll just be waiting to see if we're above the transition areas and within the overall drunken sailor range, or emerge out of any of those. So UPS, yeah, we'll check UPS out. So UPS is call dominated, above and below spot price. We see spot price within the overall transition area. So we'd like to see that move above transition and move up towards PGEX and COI. Let's see what this expiry looks like. 87 looks like PGEX. So structure is not really conducive of a large advance on UPS for at least this expiry. Next expiry, we see 90 for next week, the 17th. So again, opportunity to move up towards the 90 level, call dominated, as long as we're above transition. That's going to be a key area. So Tesla's call dominated. We are within the overall transition there. PGEX COI hasn't really moved up any. PGEX has remained at 450. So structure's not advancing that much. And then you see with the next expiry, structure not really advancing. So 450 is most likely going to be capped on the upside, and you need to get above the transition areas to be in a little more call dominated positive gamma state. So that's going to be important there. MSTR is call dominated within the overall transition. PGEX at 362. COI is all the way down here at 330 though. So that's not conducive. But there we go. We see PGX COI at 362.50. You're within transition though, so you need to get above transition. Couple little in the money put areas above us though that could cause a little stickiness for a move up. The structure advances significantly up after this expiry though, but that's just the highest call open interest in PGX though. So 410 is there, and then 400 expands a little bit, total OI drops. So I'd look to get us above transition. Obviously next expiry, we do have some speculators up there at 400, but 362.50 would be where I'd be looking for this week if we do have a significant move to the upside. So NVIDIA. HD for the next 2 weeks. Okay. NVIDIA call dominated above below spot price, above transition, 190 to the upside, PGX COI, everything looks good there. 195 PGX COI, so opportunity to move up to 195. 195 for next expiry also. So that'd be where I'd be looking for a move up on NVIDIA if the market cooperates. So yeah. HD. Oh, not JD. Oops, sorry about that. HD. All right, so full complex, we'll get to that in a minute, to the 2 weeks. Put dominated, so kind of weak within or below transition. So that doesn't really look conducive of moving up. Let me get your next 2 weeks. Put dominated, below transition, so does not look conducive of moving up on Home Depot at all for the overall next 2 weeks. Significant amount of in the money puts overhead too, so that's going to be difficult to move up. You need to see that structure change to call dominated if you're looking as a bull, and maintain this put domination if you are a bear. So MRV. Let me know if that helps on Home Depot. Marvel call dominated above below spot price, so we're good there. Significant amount of net delta, looks green. We're within the overall transition though. Extremely wide transition, so a little bit of uncertainty on positioning. You see PGX at 90, 80 is COI, so not conducive of moving up there. 90 PGX COI, so Marvel I'd say 90 to the upside. Significant supportive in the money calls below us, so any pullback looks good there. Structure gets a little bit spaced out there on the next expiry, but 90 looks like the upside. Yeah, PGX COI there, above transition. So everything looks good on a pullback. So if the market cooperates, I'd be looking for a move up towards 90. GLD. So call dominated, gold's been on a crazy run. Was it 4,000 this morning or something? So yeah, crazy. You're above PGX and COI, so structure 380, 379, 380 COTMC, but you're not seeing the speculators to the upside there. 372 PGX COI, no speculators to the upside, and then the overall structure actually drops in gold. So I would be slightly hesitant on GLD for a large move to the upside. Now after the 10th, that's the next expires, the 13th, we see 380, and then the 15th. So the structure is kind of all over the place. My main takeaway would be PGX and COI are below spot price. So 380 would be that upside target there, but I think it's going to be difficult unless you see this structure really move to the upside. So 372 and then 370. So not a large amount of out of the money call speculation on gold at the moment. ALB. This is Albemarle, right? I think. So call dominated above below spot price, above transition looks good. PGX 105, COI 110. All that looks great. This week expiry is 92 and 90, so that may be stifle your price movement up. 92, 90. So it looks like you're gonna have to go out to the 24th for that PGX COI structure to move up towards 100. So the next two expiries, the next 2 weeks, probably not a significant amount of price movement. And then on out into the end of the month is where you see a large amount of out of the money speculation, but your transition widens also. So a little bit of uncertainty on positioning, and the OI drops to 8,000. So not conducive of a large amount of speculation there. So I'd say 92, 93, 92, 93, 94 is probably where your upside target is going to be on that if you're already in that. So. All right, thanks everybody for joining us. Everybody make it a great day. Again, we'll see if we go live midday with the recap. COI. So that just means the highest call open interest is under spot price. So you do not have that large amount of call speculation to the upside. Yeah, that's what it means. So basically, you want to see PGX and COI above spot price and continuing to advance expiry after expiry. That indicates that market participants are speculating higher and higher strikes. Yep. So, all right. Thanks, everybody. Make it a great day. We'll see you later.